Hello everyone, welcome to another weekly market review. Today is the 20th of April 2020 and all the markets, crypto, traditional markets, gold, oil, commodities, they are all in a very interesting place of interest. So let's get to it. Let's start with the total market cap chart. So last week we were discussing the scenario of a potential retest of this 180 level. We did get that retest. It was slightly front run, but if you had caught me on my Twitter that morning, I was saying that I was taking big profits on shorts and looking for upside from here until this level is broken. So this is the thing, guys, when we are looking at big levels and I say that I want to manage risk from these levels. So what essentially I'm looking for is price to come as close to that level as possible and give some kind of a retest on that level so that we are able to buy and then manage risk on some kind of structures around this level. So this is essentially what it means, and that's why big and important levels are so good to play off. So you can see we got a really good reaction from here. I think just within that day we had a 10% move away from these levels. So you can see, even though people are so confused about which charts to look at, the levels on this chart are absolutely golden. So talking about levels, what have we done now? We have closed a weekly above the 201 billion weekly level. So what can we see previously? So there is one time when we were in fact consolidating to move down. I mean, the trend was very strongly down at that point. When we did get rejected at 230, found support at 180, closed above 200, and we had a couple of weeks of trading above it, and eventually it gave way again, but the thing was that this was again still a very nice place to be managing risk. You would not know while these 2 weeks were manifesting that this huge down move has to happen. Yes, considering the probability of this trend, it was possible that there is a higher probability of moving down. But again, it was a big weekly level that was lost and reclaimed. So you're managing your risk. If you are looking for any kind of upside, you're managing your risk from this level. So it is something similar, what we're doing now. So let's go to a slightly lower time frame here on the daily. So this daily block and basically this 201 weekly level. Let me just fix this, not straight. Yeah, so this daily block and this 201 weekly level is basically where I am managing my upside risk for, and yesterday we got a retest of it. That's why you saw me posting along on altperp. But basically we did get that retest, very beautiful retest, and guys who were there in my Slack, they knew that I was very interested in this level. We got a couple of percent off it, but basically if you're looking at the stronger pairs in crypto, it was a much bigger move. ETH and XTZ, these the privacy coins, they're all very strong right now. So everything is relative, guys, and relative is everything. If you understand and you can gauge relative strength and how to find it, should be always able to find the strength in the market when looking for upside and weakness in the market when looking for downside. But for now, this reclaim is good, but you can see the reaction we got from this 180. We basically made this 10%, slightly more than 10% move in a day. So it's a very, very positive reaction, and we are back at resistance. This is the local resistance, this 205 to 208 level. We are back at resistance and consolidating again. You want to build some kind of a channel or a trend line, you can see that we have smashed out of it. It's quite a clean looking channel, but we smashed out of it, retested it as support, and we have broken resistance again, and now we are testing this level from above. So if there is a possibility of another retest, I think that is a buy. You know, this is where you can manage your risk from. I think these lows are where you can manage your risk from. But any possibilities of retest to these levels, it is a buy for me. And then we can decide whether price has to get to our 225 target. That's the next big logical target if you look at it on the weekly again. So 225, where we found a big support resistance flip a couple of times before. Even on the way down, on the way up we found support here, on the way down we retested it here. So this 225 is the next big level. I do have a smaller level at about 215, 216, and there is a decent probability of a reaction there, but more likely that we can end up visiting this if this scenario is taking place. So yeah, total market cap for now, that's the game plan, that allow price to possibly give you another place to manage risk if you were missing that move. And of course we lose this level, you lose 198, 197, you can start flipping bias and wait for a retest of this level from the downside and then get to trade it down. So it's basically, what we are doing in these weekly reviews is just making the plan, guys, and after that the execution all depends on you. You see it again and again that you are seeking key levels and you're planning multiple scenarios off of those levels. Last week we decided, yes, 180 is a very good place to get a reaction, but if we lose 180, then what do? We plan to use this level as resistance and then trade price down to possibly the 150 weekly, but this was a key level, so it held, and while it held, we're looking for upside. So it's the same thing now. This is a key level, it held, and while it's holding, we're looking for upside. It gets taken, we look the other way back down. So for now, that's the game plan for essentially total market cap, but all of crypto, because this is the key chart, the master chart. This is the chart we use to build our bias and move in the markets using this. So the altcoin market cap, again, we were looking at the 63 billion level retest, and we did get that. Congrats if you were making this plan and executing it along with me, because we basically got a 20% move in this market. All BTC are correlated to BTC USD right now, so for both sides the volatility on alts is higher. So I think it is the alt pairs that you should be looking at. And it's been platform coins, Ethereum, and platform and privacy coins have been doing really well. Again, it's your Zcash Dash and it's Ethereum XTZ. These are coins that have been doing really well, but a good 20% move from a great place to manage risk, guys. The RR was very high here, and congrats if you were able to take it. And currently we are again consolidating below big resistance. You can see in the altcoin market cap that this is actually a very big resistance. We had resistance here in 2017 before we ended up breaking it. So this was key resistance. This was the key resistance we had before making all-time highs. This was a very big level, and the validity of this being a big level was on the way down. For altcoin market cap, this is the level we held and consolidated below. So this 75 billion level always gets a very nice reaction. You can see even when we dropped in 2019, this was the level that eventually became big resistance, came back. Once we closed a weekly above it, you can see we did find support again. So this is a big zone, and it's being tested from the downside again. So if we do end up reclaiming it, we have a good 10 to 15% move to more to the upside before we have a good reaction. Again, in the middle we have this 80 billion level which can get a reaction. So we have still a 10% and then another 5 to 8% move above that. But altcoin market cap, again great retest, and uh, following the total market cap plan. For BTC, this is the CME chart that we are looking at, and we do have, this is essentially not a breakaway gap, so a lot of times what happens is, if you have studied, we do get breakaway gaps on charts which need not be filled, but it is a possibility that we can come down and fill this gap. This would again give an opportunity for that possible 201 202 retest on the total market cap chart. And if this retest is to hold, this gap fill retest, you can get a nice risk adjusted opportunity for upside. Here's BTC USD. Again, pretty simple plan. We did say that there is a gap here around 70-75. So the place to, if you're aggressive, the place to manage risk is this daily level, 7k essentially, because you can see that we flipped this into support. This block here, we flipped this into support and resistance multiple times. Right here, we flipped it. The only time we flipped it into support, this entire daily block, we lost it, and then we tested it as a resistance. And our plan from last week, again, it worked out. This was the monthly level where we were looking to manage risk for upside. We did get a slight front run of it, but it was a 618. This is what makes me a little bullish, guys. Like, I think this level, this monthly open got front run right here, by, I would say, by about $20-$30. There was a lot of aggressive buying right here. So anyway, we did get that retest, and we have broken back above this big weekly level, which we had broken down below this 6900 level. You can see that we flipped a couple of times, but we broke it convincingly this time, and we did not come back down to retest it. I do remember that when BTC made this big move up, there was a lot of people waiting for longs down here. So price did not come down to fill their longs, which is again just in terms of price action and what price was doing. In the Slack, I was telling people that after this impulse, we had very shallow retraces. We had a couple of very shallow retraces on a lower time frame. So I'm sorry, I said Slack, but basically the Discord. We should be opening the Discord for the public pretty soon. Right now it's just a few friends and just a few people who we generally do trade with who are around. So we will be opening that for the public soon. And so anyway, this is the place, I think, right now, if you're aggressive, to manage risk for upside for BTC. And that 70 80 level, possibly close to the tops right here, that is the place where the CME gap is. So it is possible we get another retest. We might not, but I think the possibility of filling that gap is decent. And I think close back below here, more significantly, if we start closing below this 69.20 level, then we can start looking for downside, starting with the 6600 and then the monthly level. So this is for more aggressive longs. If you're opening right up here, you want to manage your risk. But if you're looking longer term, I think this weekly level is a very good place, which has held as resistance for the longest time. You can see we started testing this on the 20th of March. Just in terms of support and resistance price action, what did we do? We tested it once, twice, thrice, quite a few times. We smashed back above it. So basically this level in terms of resistance, it was washed, once we smashed back above it. So when we did close down below it, the next move, it did not act as a resistance, so this was already exhausted. Price went above, closed below, and the next time it just ignored it. Price just ignored this level. What level was given significance after this? It was the yearly open. Alright, but you can see that on this move up, the yearly open as resistance was broken as well, convincingly. So it it is a likely probability that it doesn't act as resistance so much anymore, and you can see that that's what happened. We got a test, and then we smashed above it. So this yearly open as resistance is washed for me as well. It's washed as a level because price has already smashed right through it. It's no longer very relevant resistance. So if we look at upside, what are the relevant resistances? I think this daily block right here is quite relevant. The 70, 78.50, 78.80 to 79.50. This daily block is very relevant. And then we have the yearly pivot. BTC loves the yearly pivot, and 81.50. So this zone is going to be big resistance. And if we match it up with the total market cap, should be about 10%. Yeah, so the 225 level on total market cap matches up with this daily block right here. So if we are to get that test on the total market cap, essentially this is the potential level where BTC could get a reaction. So yeah guys, so BTC, the plan to manage risk from here. If you're aggressive, look for that CME gap fill, potentially try to manage risk from this level, and let's see if we can trade it here. We lose this is more likely another place we can get a reaction, but I wouldn't be looking for downside on BTC until this weekly 6900 level turns into resistance. That's when I would be aggressive with looking for downside, starting with 66 and then 64. And for upside, once we do end up breaking these 7400 levels, maybe we get another reaction from this, but eventually this is where I would look for a bigger reaction on BTC. Here's Ethereum against BTC. I think we just reclaiming a very key level. That's why I want to point out to this chart right here. So you can see that we held this level, this daily level, as support for a very long time, essentially all of 2018, 2019, till we finally lost it. At the end of 2019, we finally did lose that level. We made a bit of a consolidation and we broke up. Of course, we did lose that level once more, but what we have done is we've reclaimed this. For any kind of upside, this is the level that you should be managing your risk from. And what have we done? On the daily, we came back and tested it. Let's just look at it on the 4-hour. So we came back and retested that level. No, we have to get another retest again. But if you're looking for any upside and looking for bullishness on alts, I think this is the key level, and this is the level against BTC for ETH that has to hold. So we had some nice confluence here. It was decent to look for upside, and if you're looking at all BTC pairs, then just keep a lookout on this. So we're looking at the Dow Jones Industrial Index right here, and I just wanted to show you something interesting that I found interesting. So what we're looking at is two previous big crashes, this 2000 and 2008, and what I want to show you is just in terms of timing. So this is basically essentially the first counter wave in this move down. This is the first actual counter wave we got. So you look at the timing, it's around the 20th of March, around the second to third week of March, and we got about 56 days of a counter wave. 56 days is 8 weeks. 8 weeks of a counter wave, about 25%. I don't know. I think the percentage may not matter, but basically we went all the way back to what was a big resistance. All right. So we had 8 weeks of a move back up before continuation down. All right. And this downtrend, it lasted for quite a while, but this was essentially the first big counter wave. So let's get to 2008. All right. So 2008, we had the big crash, and then we settled down a bit. Then again we got the first big counter wave. Again, this was the 10th of March. All right, so this is the second week of March. We had a 50-day counter wave. The percentage doesn't matter, but basically it was to what was major resistance. These support levels, they turned back into resistance, but again it was 50 days. All right, So let's come back to where we are right now. So right now, again you can see the counter wave, if this is a counter wave, you know, we started from the third week of March, all right, and we are currently how many days in? It's been 4 weeks. It's been 3 weeks. It's 21 days. So we extend this to 56 days, 8 weeks. There is still some time to go. Even if this is to continue, as many people think, there is still enough time. There is still enough sentiment for this to just carry on. Even if it has to follow this fractal. Why have I pulled this all the way up here? Because this is where I see on the Dow Jones Industrial where the big resistance is. So this 26,000 level, which essentially, if we just look at percentages, is still another 8 to 10% higher. The actual big resistance, you can see on the weekly, resistance. We watched it here and then we smashed above it. Even on the way back, even on the way down, we did test this resistance. So this 26,800, 26,750 level. So if that is the case, then I would say that we still have this springtime, which is there to just absolutely decimate the people who've been sitting in puts, basically, been shorting this market in complete disbelief all the way from the first bounce. So I think the scarcity over here in this metric is just to ruin everyone, because you can see short positions have been exponentially increasing, and this is the same for crypto. You just see so much engagement on bearish tweets, and the mindset has absolutely flipped. So the thing is, okay, we will get a reaction at these levels, but what happens after? Does it absolutely get decimated? We cannot say. But this looks like a good place to get a reaction, and for me this looks like good timing to get a reaction. That saying of sell in May and go away, so May would be a good time in traditional markets to get a reaction from resistance levels, because for now, shorts are still too aggressive, and for now, what do you see? We see price just moving against them, and the market can stay irrational, for as longer than you can remain solvent. So please do remember that. And currently, on whatever time frame you have a month's uptrend, look at any lower time frame, momentum indicators, or look at whatever else you want to. You're just in an uptrend, until you're proven otherwise. I do not know why people are just looking at the conditions around them and they are basing their bias on that. The market is using that against everyone who is doing that. So if people don't understand how markets work, this is just how they work. There's just too many people on the wrong side of this trade, so it can carry on going up. And okay, we get that reaction here. What happens, if this is depression or recession? Okay, we get head towards testing the lows again. But if that is not the case, if this is just something virus related and economies can start recovering from it, then no, we will not even possibly test the lows. Then we could just turn around from here. There could be enough demand to build that higher low. And if it's too aggressive, if the recovery is really well, we start finding treatments that are better, we might not even dip that deep, and we might just carry on from here. So these are possible scenarios to keep in mind, for everyone in crypto and in traditional markets. This is where people are regretting that they did not buy, 4,400 BTCs where everyone's regretting they did not buy. So what is the whole market doing? Sitting in cash and waiting for this big dip to come. Is it going to come? Well, in all probability, it might not. It might just dip less and move higher. so everyone who had to wait out, they pay a premium. But it does not matter to pay this premium either, guys. What matters is the directionality of the market. If you're buying, what matters is that yes, you end up buying at a space where there is a decent probability of continuation. You're buying at a place where you're able to manage your risk for further downside, and those are the things that matter. You will not be able to predict what happens, but you can find good levels. You can find seasonality, to be in your favor. So it is just about adding to the probabilities. Just add confluence to the scenarios where you want your execution to take place. So for traditional markets, I cannot say anything much more than this. I mean, seasonality says there is still probability of continuation to the upside. For Dow Jones support resistance levels, there still looks like there is room for price to move to a major resistance level, and sentiment says that upside is still the path of maximum pain. For now, this is just what it is. And in terms of downside, then we have to see once we start reaching major resistance levels. We did reach a major resistance level on the Nasdaq. I had highlighted it on my Twitter, but currently the reaction from that has not been strong enough. So if price is just smashing resistance levels, you have to see, guys, like once you get a big resistance level and price breaks back below it, so if say this is a big resistance level, say 23,500 on the DJI, so once price does break back below this level, you can start looking for downside, managing risk on that level. But catching a knife just somewhere on this uptrend because you think, oh, things around you are not so good, and if everything is closed, why is the market going up? Then you're just part of the fuel, that is allowing this to carry on. So just keep that in mind, guys, and keep the seasonality in mind, and let's see how price reacts to these levels if we have to get there, and let's see if we do continue to have another bullish month for traditional markets and for cryptocurrency. So here's a look at oil. This is basically the fractal I drew in March, essentially early March. We have reached my fractal target for oil right now. I was looking at $15 oil, guys, and this fractal has manifested, fortunately for some and unfortunately for others. And $15 was my price target. Essentially, I would not aggressively be looking for longs here, but I am looking for a decent reaction. So you can see that in the previous crash cycle fractal, it was the point of breakout, which was this green box. The point of breakout was taken out convincingly. Essentially, we spent another about a month here. But on a higher time frame, guys, I think eventually, if this fractal is manifesting, this point will just be a wick. This $15 oil will just be a wick, and that does not mean I'm recommending to buy it right now. But I think this is a point to get a good reaction. So if there is some place to be looking for some kind of a reaction, this is the level. So it's absolutely amazing. We have hit this $15 oil target. And also, if the economies are going to eventually start restarting, the demand will go back up, guys. Production and productivity. We do not have an alternative right now which is sustainable and that can sustain this, So do expect things to turn around, if not this month, then next month. But this was the level, the point of breakout. We have smashed it, So this was essentially the place, this was the level which was actually around here, $15. And that is the reason I had thought that we are going to come and take out this level again. And we have done that. For me, it's going to be a very big opportunity here, guys. Because if this continues to manifest, which is absolutely going to skyrocket in demand again. If humans are going into space, they will need a lot of fuel, and I don't think demand ends up staying where it is for too much longer. So but anyway, I just wanted to show this fractal again. We are at a great definitely a point of big interest and a point where a very good reaction is possible. So make of that what you would, guys, and let's see how this manifests and whether we can hold this. For me, we could maybe take it out sometimes again, but I would say that there is decent potential to hold these levels and not smash any lower. If it is to be like, I mean, I don't know if we can get that $12, because this is the actual point of breakout, but just $15 has a decent amount of confluence, guys. So it's very interesting, very good point of interest, and let's see how the next couple of weeks manifest. So here's a look at gold. We are currently at a very nice level of confluence. The 2013 yearly open basically is a point that is held as resistance for the longest time, and it's in confluence with the 382. If gold is actually very bullish, guys, then this is the level where it should hold, and this is the place where we should be managing risk. And if it is so that we do have to come lower, then this 618 along with these lows right here, this is the place where I have interest. Also lines up with these tops, so I would say about 1640, 1635. This would be the next area of interest for me. If this level is not able to hold, and if gold is not bullish enough, this is the next place I would look for a reaction. We did end up catching this 382 level and a reclaim of this big monthly level, so I would say that if you are looking for some kind of safe place to catch gold, it's possibly this 1630, but you should be managing something on a lower time frame here if gold is eventually able to hold and flip this big 2013 level into support, because then we can start looking towards further upside and all-time highs in gold. So big area of interest and very nice confluence right now. You can manage risk right here. Look for structure on lower time frames, and if you lose this level, then this is the next big level of interest for me.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!